Hey guys, in today's video I'm gonna be talking about why saving money won't change your life. So let's start with the truth. Saving money is good, is very good. Most people are terrible at it. So if you're saving, you're already ahead, right? But the problem is that savings on its own won't make you rich. And why? Because saving is defensive. It protects money, but it doesn't grow your money. So let's say you save 200 pounds a month, it will be or dollars or whatever is your currency. After a year you will have 2,400. After 10 years you will have 24,000. That's solid. It's not rich, obviously, but it's solid. So let's add inflation, the main problem with investing. So prices go up every year, right? Your money is actually losing its value while it just sits on the account. So the first big issue, savings feels very safe, but it's quietly losing power. So I recently heard this good quote about this, that savings is actually very safe in a very short term, but is very risky actually it guarantees you're gonna lose in a long term. That's why you can't save big amounts of money for a long time because of the inflation, because it's losing its how much it's worth, how much you can buy for it. Second problem, you can't outsave a low or average income. If you earn 2,000 a month and save, let's say, 300 pounds a month, that's discipline, but there is a limit. You can only cut so much, right, from your bills, from save on food or whatever. At some point you will hit the wall. Rich people don't get rich because they are saving more, right? They get rich by making money work for them. I'm sure you heard this reference, money makes money. That's where investing comes in. If you take the same 200 pounds a month and invest it in stocks like index funds, something like a broad stock market, over time it compounds. That means your money makes money, and then that money that you made on the previous money makes money as well. Yeah, that means it's compounding. That's the difference between like a snowball. You know, on beginning is small. The longer it gets time, it gets bigger and bigger, and your profit from investments in the long term are getting bigger and bigger. That's why they always say about this 100,000. Get first 100,000 and then you golden, right? So it's for people on normal wages. The difference between linear growth of saving and exponential growth investing, that's the difference. That saving is linear growth and investing is exponential growth. That's when most people get it wrong. They focus on saving, cutting coffees, canceling subscriptions, living light, and of course that helps. Yeah, that's needed. But if you don't invest or increase your income, you're just slowing down your life, not building wealth. And now about increasing income, that's getting yourself better, training yourself to do something better, to upskill in your field or in other field, or I don't know, starting a business on the side, you know, like a side business. That is actually probably even more important than investing. And that's the best investment you can make in yourself. Yeah, train yourself to do something better. And then your wages, if they grow every year just inflation rate, that means you're not getting more money. That means you're on the same level. If they don't grow, there are many companies who don't give you raises every year. And if the money won't grow, at least the inflation rate on every year, then basically you're losing. You're getting pay cut every year. You understand that? It's simple as that. I'm sorry I'm talking like that, but I didn't understand it back in the time, like 15-20 years ago. And when I had pay rise once every 3 years, I was happy, and I was actually losing money. Yeah. So I've done this myself. I used to focus on savings, everything, thinking that that was the goal. But the real shift came when I realized the savings is just the fuel and investing is the engine. So savings gives you options, give you a buffer, you have your safety money, right? And then when you have this, when you have your safety money put down, they say 3 to 6 months. I prefer to have only like a month and rest invested, because after so much time in markets, my profits are so big that I could easily, even if the market will drop like 40%, I could easily take out very quick money to if I need for something. That's why I keep only for like a month, and my girlfriend the same. She has a little bit more cash because she's ready for if the markets drop a lot, which many people expect will happen soon. Not advice, I don't know, so I don't bet on it. She wants to have some cash in case it drops, then she will buy more stocks, basically. That's the only reason why she keeps more cash. Yeah, so actual wealth comes from what you do after you save. So the real strategy is simple. So there's save money, invest it, and increase your income. Yeah, that's how you move forward. Another thing is risk. Savings feels safe because there is no risk, but there's also no reward. Investing has risk in short term, but historically is one of the only ways normal people actually build wealth over time. And if you're only saving, you're playing defense your whole life. Basically, yeah, like I said before, at some point you have to start playing some offense, right? And that's when things actually change. I understand people are risk averse and they try to save the money, and they think they're safe then, but they don't understand that inflation is cutting down from their money. If you invest in broad stock market, there was no 20 years period that you would lose money. If you invest for 20 years, there was no incident before, back in time, that in the 20 years time invested money would lose you. You understand that? The longer it gets, the more safe it is with investing. Yeah. If you care about money and real numbers, subscribe, like, and I wish you a very nice day.